headline consumer inflation jumped to 3.5% in July from 3% in June 2025. According to Stats South Africa, this is the highest rate since September 2024, when it was 3.8%. The main contributors to the annual inflation rate were food and non-alcoholic beverages, particularly meat, followed by municipal tariffs. Inflation for food and non-alcoholic beverages rose to 5.7% from 5.1% in this period. The rise in this category was mainly due to higher meat prices. On average, beef prices increased by 7.6% between June and July. Another driver of the annual inflation was municipal tariffs, which are adjusted annually in July. And in this period, water and electricity tariffs increased by 12.1% and 10.6% respectively. So let's make sense of all of these numbers that I've just thrown at you. I'm joined by CEO of Inkunzi Wealth Group. That's Owen Nkomo. Good afternoon, and thank you for your time, Owen. So it's a significant increase, isn't it? 0.5 percentage point increase compared to June, where it was at 3%. But is it significant enough to register on the scale that gets us concerned?
100%, Tulasizo, it is a big number. 0.1 to 0.2 was what we're looking for on the upside on inflation, but the number is coming higher by a margin of 0.5%, which is quite concerning. And I think there's a whole lot of factors that have played into the pricing of inflation going up, as you've mentioned, food prices and the municipal rates going up as well, and particularly, non-alcoholic beverages actually having an impact on that number. If this becomes a continued pattern that we see over the next few months, then I think that the Governor Kganyago is going to laugh at me and the guys in my industry who have been saying that we need to see higher rate cuts. Definitely a concerning jump in the inflation number.
Where is this concern directed in terms of the impact of gradually or nascent inflation increases? Where is it likely to be felt the most? Is it at the level of household budgets?
So because that number is a backward-looking number, it means that households are already affected. This jump means that people have paid more for food and they've paid more particularly for, as I've said, non-alcoholic beverages. You're talking oros because the heat is back. You're talking about, all the non-alcoholic drinks that you have. The price of meat also up quite significantly, and that is going to obviously affect, households out there that are obviously battling to cope with this difficult economy that we're in.
Yeah. And do we have an understanding, Owen, of the reasons, the underlying reasons, particularly for food inflation, those items that you just mentioned, meat prices in particular? I think the administered prices, your electricity and the likes, the municipal rates, I think we sort of get what happened. Many South Africans can pinpoint to certain decisions made over the last few months. But what about food inflation? What's our understanding there?
Yeah, so food inflation, again, the price on food inflation has been, the inflation on food prices has been relatively low. And I think that the market pricing on most food items in the common basket has been under pressure over the past few months, and that's why it's registered finally at the tills when we buy food and we take that home. Meat in the meat markets as well has been obviously under a lot of pressure in terms of pricing, and that's why you've got this upside of 7% on the cost of average meat products, and I think that's where the bulk of the inflation is coming from. If we strip out the regulated pricing that you're talking about, that municipal rates.
And knowing what we know about our MPC's approach and the governor's stated objective to keep inflation low, are we at a point where we're able to start anticipating what's likely to happen if this trend continues? And it's a big if this trend continues.
Look, I think we still have room because, remember, we've always wanted our inflation target to be between 3 and 6%. And there's been talk of putting that range a little bit lower because inflation over the past decade has been between 4 and 4.5% relative to the long-term inflation of 6%. So I think it wouldn't be wise to reverse the curve that we've started, where we have started to reduce interest rates. The last rate cut was a beginning of what we hoped was going to be more rate cuts to come. But if you look around the world, inflationary pressures are starting to go up significantly. America is battling, and these tariffs that Trump is throwing around is putting a lot of spanners in the wheels, because it's actually driving inflation through in some scenarios. Luckily, the price of oil has managed to stay relatively low, which is a good thing. But I think that if it starts to tick up, we're going to have a lot of imported inflation that will push prices even higher, and the sub might be pushed to actually start pushing interest rates higher. But I'm hoping that at the very least, they'll keep interest rates where they are, maybe for the next 2 quarters.
Yeah. In fact, say a bit more about that imported inflation that you talk about. Talk about the headwinds that will be coming from developments at a global stage that have to do with, the state of the global economy and how that's being impacted by some of the recent developments, such as the tariffs that have been negotiated, and many of them are coming into effect as we speak.
Yes, those tariffs from Donald Trump, you would think that Donald Trump has been around for more than 1 year in the White House for his second term. But in a short space of time, he's really done quite a lot of damage. And these tariffs are definitely having a negative impact on economies. People are losing jobs. Pricing is just not making sense. Because if you think about it, any economy that's trading with America is seeing prices start to increase. So input pricing is going up. That is translating obviously into inflation across many products in the world. And so unfortunately, until Donald Trump finishes his term, there's no telling how much more of this tariff tug of war is going to happen. But as long as it is in place, we can rest assured that inflation is going to continue to be a concern. In America, inflation is starting to be a concern. Interest rates are also starting to reflect the fact that pricing going forward is going to be on the upside, particularly in an economy that was just starting to take a break from higher inflation. If you remember, America's inflation had been above 6-7%, but it managed to come down and significantly so, helping global inflation also to come down. But again, where we are right now, these tariffs are not helping us at all.
Lastly then, Owen, do the conditions you and I have been discussing in the last few minutes conduce for the kind of conversation that the governor has been wanting to start around anchoring inflation around a particular target point as opposed to this range, and saying this range is too wide and doesn't conduce for the South African economy's competitiveness? Do the conditions conduce for that kind of conversation, as well as, what's been the response from the National Treasury that has been talking about, hang on, we are nowhere near announcing anything of that nature. We need to engage. What are you talking about?
Yeah, so that's another interesting one. I really do think that given the long-term, the fact that the long-term inflation rate in the country has been at 6%, and where we've seen it now between 4 and 4.5% in the past 5 years or to the past 10 years, it does warrant that we need to relook our range for the subs in inflation rate range from 3 to 6%, maybe pull it down by a percentage or 1.54%. But until the guys at Treasury and Lubabu Kotongana do agree to start having this discussion and bring it possibly to the table for formal conversations, I don't think it's going to happen. And unfortunately, that means that we're going to have to possibly live with the effect of a very big differential rate between where the prime and the prime lending rate and the repo rate are, and where inflation is, which is really not great. And Donald Trump doesn't like that. And on that front, I actually I side with him. It's probably the only thing that I agree with Donald on, the fact that we need to start bringing interest rates down. And I hope that we could start doing that more, because we really have a lot of cushion when I'm for in terms of bringing interest rates down. I wish we could just do that. Or we had done that earlier. We'll probably have interest rates being lower, maybe by 150 basis points more by now. We took too long to act, actually.
All right. I've got to thank you for your time. Thank you for your insights, as always. That is Owen Nkomo, who is the CEO of Inkunzi Wealth Group, weighing in on the conversation around inflation.